Normally, this is the part of the week where I'd be digging into a ton of new economic data. But, well, we can't do that today. The US government shutdown means the maps that everyone uses to navigate the economy, they're just gone. We're all flying blind, literally forced to make decisions based on gut feelings instead of hard numbers.
So, here's how we're going to break down this huge cloud of uncertainty. First, we'll get into why the markets are in such a fog. Then we're going to tackle the big one. Is the AI bubble a ticking bomb? We'll also look at what this statistical scorched earth really means for you. And finally, we'll see how the big crypto institutions are playing their cards. All right, first up, the markets are in a fog. And listen, that isn't just some catchy headline. It's the stone-cold reality for every single investor right now. The charts, the data, everything the Fed and traders rely on, it's either super delayed or just plain wrong.
And that leads to the million-dollar question, doesn't it? What on earth do you do? When the tools you use to make sense of everything are broken, the market just freezes. We're all left scrambling, trying to build a puzzle with half the pieces missing.
Now let's layer on the first massive threat that's hanging over this whole mess, this growing, nagging fear that the whole artificial intelligence boom has created a giant, unstable bubble just waiting to pop.
What's really wild is that these warnings aren't coming from the fringes. They're coming from the very top of the financial world. You've got David Solomon, the CEO of Goldman Sachs, coming right out and predicting a pretty significant market drop.
And this isn't just an American worry, not by a long shot. The head of the Bank of England, Andrew Bailey, he's saying the same thing, calling the AI bubble dangerous and telling everyone to be very vigilant. You know, when a central banker starts using words like that, you really have to listen up.
But it's not totally one-sided. While the bears are worried about a huge pop that could just crater the entire market, there are still some bulls out there. For example, the CEO of a company that actually builds data centers, the physical guts of the AI industry, he says he's seeing a powerful pipeline of projects in the US and absolutely zero slowdown in demand.
And this right here really drives home just how big this issue is. This fear has gone completely global. Some analysts are even saying the AI bubble in Asia has already popped, which of course makes you wonder what's next for the rest of us.
So let's pivot to the second huge thread, and you'll see how these two things build on each other. We're talking about the data blackout from the shutdown. This isn't just an annoyance, it is actively destroying the very tools we need to see if the economy is healthy or not. To really get how bad this is, we got to talk about the CPI, the Consumer Price Index. This is one of the most important numbers for measuring inflation, and right now, its accuracy is completely shot. Here's the key thing to understand. Real people, agents, go out and collect prices on like 80,000 different items all over the country. But because of the shutdown, that collection process has slammed to a halt. The data chain is broken right at the very beginning, which means the next big inflation report, it's going to be based on old, incomplete numbers. Some analysts have started calling this a scorched earth of American statistics. And that's such a perfect description, isn't it? For the people who rely on this data, it's like trying to grow crops on burned-out land. The quality is so bad, the gaps are so huge, there's just nothing there to work with. So, you're facing a potential AI bubble on one side and a total data blackout on the other. How are the big money players in the crypto world reacting to all this? Well, let's take a look. If you look at the Bitcoin ETFs, the picture is, well, it's not pretty. Since October 29th, there has been only one single day of net inflows. Every other day has seen money pouring out. That's a really clear sign that institutional investors are hitting the brakes and pulling back. But wait, it's not a full-blown five-alarm fire. When we look at corporate treasuries, things are a lot more stable. Over the last week, we actually saw a small increase in the amount of Bitcoin corporations are holding and just a tiny dip in Ethereum. So these are not panic moves. This is caution.
And this chart right here, this flat line in Bitcoin reserves on exchanges, it pretty much says it all. For months, those reserves were dropping. Now, the trend has stopped dead in its tracks. It's like someone hit the giant pause button on the whole market. Institutions aren't buying, they're not selling, they're just waiting for the fog to clear.
Okay, so let's quickly recap what we've covered. Number 1, the markets are flying completely blind without good data. 2, the fear of a massive AI bubble is real and it's a huge risk. 3, those key economic numbers we rely on are basically useless right now. And 4, because of all that, institutional crypto investors are being extremely cautious, not panicking, but definitely waiting on the sidelines.
And all of this leads us to the one final critical question. We're in a period of total blindness right now.
But when the fog finally lifts, when the data starts flowing again, what are we all going to see? Will it be a sigh of relief? Or will we discover that all the dangers we were worried about in the dark were very, very real all along? If you found this explainer helpful, be sure to smash that like button and subscribe so you don't miss your next Daily Edge. More news in our Telegram channel in the first comment. See you next time.